Good evening, everybody. We're going to take today, which was a big reversal in the S&P 500. Now I'm going to take a monthly chart right here, and here's what we're going to do together now. And we're going to do this for your own good. So basically, in January um, of 2017, we took off like a rocket and we made that high up there at 28.72 right here. So now when you take a look at the actual price volatility in both market directions were going to play their intraday ranges, and have they ever. And we gave a red bulletin out to people already, and what that was that price volatility in year 2018, that's here to stay, because in the biggest part of this rally, we have what they call high frequency trading technologies that were used for the upside. And basically today, what I'm going to show on the monthly now is that the monthly low right here was 25.53. And what that there converts into the red bulletin for you right now is that 10-month moving average is the blue line, and then we have the 20-month. Now, back then, we opened up at the highs of the market on January 1 of 18, and ever since then, we've been coming down in this reversal. Now, I'm going to show the opening month in January of 2017. That was at 26.45. The high was 26.94, and that low was 26.05 on a monthly level. Now, when you take today's data in calendar 2018, you will come up with a 26.33 area for the month, and you're going to have that 27.17 top right there. Now, that low for this month is 25.53.80 pennies, and the close was 26.34. Now, I'm going to go ahead and move this out of the way. So, based on those prices from January 17 until January of 18, and here we are today on a 60-minute level, because I want everybody to understand what that big reversal was and the selling was going. And we're in a quarterly earnings season, and some of the earnings have been just fine. But I will say one thing: this market right here, right now, is going to have trouble. And this is where all the sellers were in charge. But just for you to understand that part now, when we go over to a daily, and we're going to talk about the actual setups on that daily chart right here with that S&P 500. Here's what you got to realize, okay? Now we're going to convert this in here again, and everything is done mathematically. We own our own option trading platform, Panther, and we also have our own platforms for the equity side, futures, and all kinds of neat stuff. Here we are right here on a daily. This was the 200-day moving average on a daily when we have put those lows in there, and everyone knows exactly what that was. That was the low right here was on 4/2 of 2018. So this is 4/2. And we rallied on up, reversal, what they refer to that as a reversal below that 100-day simple moving average in the yellow. Not only that, that white line that's declining, that's a 50-day simple moving average, and we clearly have violated. Let me just show everybody. And volatility works both ways. That's why I'm showing this to you. And for you people that want to trade options, and you want to do, but you want to know how to get the entry and the exit, and that's exactly what we're going to be doing. So we came crashing down through here. Now, here's the deal on that 200-day simple moving average. That number is going to be exactly 2605.57 pennies. So the thing about it is, and this is basically standard technical analysis. It's not what our platforms are designed on. This is the retail platform, and these are retail charts in the background. So basically, you violated everything again coming down. Now, we had a big tug of war back over here on that 200-day simple moving average. You could see the volatility was a much greater value. And you know what? Let me just tell you another thing. You people aren't used to the volatility. If you came late to these markets, they were just taking them all the way straight up last year and for the last 8 years. And basically, this is the actual reversals. And I just wanted to blow this one piece up. Thank you for being patient. So let's just focus that right there. So each one of these trend lines are based on mathematical equations on that S&P 500 index. And I can tell you right now, you can make a fortune trading the S&P 500 index. But right now, that's what's happening. Okay, and we gave the red bulletin out because we did. And that was a while back when we did that. Here's the weekly chart on this S&P 500. One more time, I want you to understand the numbers because the prices that I'm breaking down for January of 17 and then starting January of 18 and how relative to the prices are that are equal the moving average that I'm discussing herein. Now, on this weekly chart, that blue line is a 20-week moving average. Now, here's the deal. It's closing below it. And you can see that trend line down here. Well, it's a major support level right there. Now, that 10-week moving average, the blue line, you can see that the part of that crosses, we are going to have a special workshop on how to use moving averages, even for you old timers, that you say. But the moving averages is going to be a topic that people will want to attend for free. Now, the wider that weekly moving average, the wider the common denominator between that value right there, and I'll go ahead and just let you know it, man, it's 2706. So let's get our calculator out if we can find one. So if you take 2706, which I'm going to do here in a minute, and whatnot, my Excel, okay. So we're going to take that common denominator, and what we're going to do from the weekly perspective is the 20-week moving average is 2706, okay? And that 10-week, that blue line that's going down, that one is at, so let's go minus, okay? And now let's do this. Let's go 2677. That's what we're doing. That's what I'm plugging in here now, and we're going to go equal. That is 29 points. Now, let me explain something to you. From the 10-week sloping down, the higher the common denominator, the weaker that the S&P 500 is building in further weakness right now before it can, take out some more lower lows. And it will. I'm teaching you the 10-week common denominator value, that 20-week, and then we subtracted it and we got 29. That's the ratio, 29. So we need to know what that's going to equal in price. And what is a strong price at the highs or a weak price, and they're going to fall down and you can make money that way. So here's the common denominator, and we'll do that a different day. We're breaking down on the weekly right now. And these weekly movements that I'm talking about, like the low right now, this week, we're in it. It's 2617. That is going to be the common denominator for this week already. So here we are. We were at 2675, and I'll be doing that live trade on the S&P 500 put options. You want to talk about making money, this is how you do it. So here's what we have. Now, treat yourself good. Take the free 5-day trial. you owe that to yourself, because if you do give yourself a chance, you're going to see that everything I'm talking here in, from the intraday level to as long as we want to look out. And the thing about it is right now that that price volatility, people aren't going to be able to handle it, but that's okay. If you're here, we're going to be giving the orders out in our market maker division. So the prices are going to be fired off, man. All you got to do is load them. That's all you got to do. If you want to treat yourself well, and I feel that you would owe that to yourself, given the opportunity that you do. And once you do, then your thought process will change immediately and you'll be very grateful. I do know that. So this is a 10-minute video alert and whatnot, but we were going in the calendar year and we were looking at the numbers right around where these 200-day simple moving averages are. We're back in those time frames in price. And so we're going to see right here, if we hit that green line, is how much of the price would go below it and then get all the way down here to 25.50. After we break below it and break support levels over here, well, then we know that we're going to reach our targets. And that is everything as a special bulletin today on the S&P 500.